when we've had these prior moments of selling, and they've come more fast and furious, probably because of market structure, ETFs, hedge funds, blah, 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 you have urged your clients to remain long and strong. You have been correct, even as others have gone nervous. Are you changing that tune?
You know, Brian, I think we got to tweak that tune just a little bit. We still think 3,600 by year end, but let's put it into an analogy. So I know that you played baseball growing up, and if you're sitting at the plate, you got 3 balls, no strikes, what do? You
don't swing, brother,
take
no matter where the pitch comes in.
Yeah, exactly. You take the next pitch. You take the next pitch. That's what I think you got going on with this market right now. You look at all the problems that we've got happening right now, and we're starting to see some of our technical indicators starting to come in a little bit. Some of the shorter-term momentum indicators are starting to wane a little bit. Some of our breadth indicators that we've looked at for years are starting to deteriorate a little bit. You got to take the next pitch and see where this market shakes out over the next, say, 40, 45 days or so, and then we get through this election. When you go back and you just look through history, and again, if history at all rhymes, and it is playing out like history suggests, strong August, weak September, sort of neutral October, and then you can get a strong finish into November, December. I think that's exactly what we're probably going to see happen this year. But Brian, between now and then, we're probably going to see this market correct further. We're going to be retesting, again, this kind of 32 level, which is where the June highs came into play. But ultimately, I think you got to see this market correct back to at least the 200-day moving average on the S&P 500, which is around 3105, 3106. So another 4% or so at minimum, Brian, I think is what you're going to have to ultimately see before this market can find its footing. And Brian, I also want to add, you were talking about the NASDAQ 100 earlier. Right now, if you look at the 5 largest stocks in the NASDAQ 100, they represent about 45% of the market cap. I don't know if you can call that any sort of diversification whatsoever, but 45% of it, 5 stocks, that's a little bit troubling from my perspective.
Well, listen, man, I mean, I don't know how long our viewers have been watching, but for a year and a half, I've been screaming about this concept of market structure. I think I called the stock market a bowling ball on top of a pencil at one point. Probably took some heat for that, but who cares? Because you got to call it as you see it, just like an umpire might. Craig Johnson, by the way. 2 types of downturns, though. There are the ones that are healthy, right? You got a cyclical correction and secular bull market, and those that are the start of, multi-year or multi-quarter down cycles. Which one might this be?
I think this one is just going to be a correction in terms of the longer-term secular bull market. And again, I think it's going to sort of last over the next 45 days. If you just go out and you look at the VIX futures at this point in time, they are twice what we've seen in the last 2 elections. And again, more uncertainty than we've seen over the last several elections, and hence why this market probably will come in further. If you also go back and look at this market, when we got to the highs on September 2nd, this S&P was trading about 17% above its 200-day moving average. And again, trying to keep it simple for all the viewers and everybody else out there, Brian, you rarely see a market trade at 20% above its 200-day moving average, going all the way back to the 1960s. So not surprised to see here, based upon the seasonality of the election, how far we got above the 200-day moving average, to see this market come in. Now, don't mistake, we're still longer-term bullish on this market. We just need sort of that pause to refresh. But yet, it's going to come from a lower level than we're at now. So take the pitch, wait for that fat pitch to come, then swing at this. But it's not now. We'll get it from a lower level.
I like it. And very quickly, Craig, leave us with an idea. Broadcom, AVGO. You like the technical setup, even in the face of what you said is a nervous market?
Well, Brian, we talk about taking the next pitch. Well, unfortunately, a lot of the portfolio managers, they have to swing at every pitch because they got to be in the market at all times. So thanks for bringing that up. And yes, AVGO looks like a great technical setup. You're put right ahead of the 5G rollout. You're breaking out the new highs. That looks terrific. And also in the healthcare space, take a look at Align. Big longer-term downtrend reversal. Looks like you could put a big smile on that stock, too, and it looks quite constructive. And those would be 2 names that I would be swinging at those pitches with.